JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 21st of August 2020, so yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts, the first one I want to touch on here is the Nikkei 225. So the index closed fractionally in the green today, and this way kind of ending the week in the red still. So however, on the positive note, that the index managed to remain above this downside resistance line taken from the high of the 8th of June, and which was broken last week. So this week it managed to maintain itself above it, although, like I said, although we saw a bit of a decline here. So as I've mentioned to you guys previously, that as long as the price continues to balance above the this downside resistance line and the this 21-day EMA shown as the yellow line, there is a good chance we could see another push higher here. So for now, one part of this is still working out nicely. So let's see if the second part of this idea, which is a run to the upside, could work out as well. But for that, we need to see the index kind of reversing sharply from this downside line and making its way back above the at least the 23,185 territory marked by the highest point of June. And then, yep, we could get a little bit more excited about higher areas. If by any chance we get a nice daily close below this downside line, then yep, this would also place the price below the 21-day EMA, and lower levels could be met. Now jumping into Shanghai Composite, and here the picture is a little bit difficult, I would say. I mean, however, also is working out according to the plan that I was talking about this week. Basically, of course, today the index is slightly in the green, kind of getting the Asian markets in general are following the US equities yesterday, which managed to gain quite a decent amount, I would say, especially NASDAQ 100. But here, I mean, we're seeing that the decline that happened here during the second half of this week got halted near the 21-day EMA, as you can see here. And this is the idea I was talking about in one of my videos yesterday and the day before yesterday. So we're saying that in a way, if it drops below this 3,409 territory, then yep, we could consider a bit of a decline here towards this 21-day EMA initially, and then we would take it from there, because we want to see how it's going to perform around here to get excited about larger extensions to the downside within this range, because don't forget that for now we are considering this as a range. In order to get a little, like I said, a little bit more excited about lower levels, then a drop below the 3,307 zone could do the trick for more sellers. But again, for now, the price is getting a hold of near this 21-day EMA. So we do have around 50 minutes left of trading here on Shanghai Composite. So let's see where that's going to end. If it ends somewhere below this 21-day EMA, or even below the 3,336 level, I talked about this previously, still we'll probably remain a little bit on the cautious side, because again, as I said, a drop below the 3,307 territory could strengthen the downside scenario. Now jumping into German DAX, yesterday the index closed in the red, however remained above this 21-day EMA. So although we're seeing a bit of a decline here, the index managed to remain above that 21-day EMA. So basically the bears are failing for now. So let's see how all this is going to play out today. Looking at the cash index, for example, right now, and where it's trading at, it's currently sitting at around 12,870 zone, above yesterday's close, but still below this 12,913 barrier, which I talked about previously, and that's basically the highest point of June. A nice good push back above that area could in a way open the door towards slightly higher levels again. So that's why, guys, for now, be very careful. Let's keep an eye on this level here as well, the 12,773 zone, which continues to provide decent support together with the 21-day EMA. And if we do see a drop in a daily close below this, then yep, we could start considering lower areas. Jumping into DXY very quickly, so the dollar index here drifted back down yesterday. Today we're seeing a bit of a move further south. However, the good part is that the after the this index managed to reverse from this 92.24 level, it got back into this previous range, and now you can see that, yeah, although it is declining, it still remains above the lower side of this previous range. Now, of course, we cannot. This range is already violated, so in a way, we can forget about it. However, keep your eyes on the lower side of the range here, which is around the 92.55 level. If this area continues to provide somehow support for this index, this could lead to a nice reversal here back to the upside, and potentially we could see even this little decline of these two candles here. We could see that as a potential bullish flag here if we look at the shorter time frame. I'm looking at right now at the daily chart, but if you jump into, let's say, a 4-hour chart, actually let me just do that very quickly. There we go. So in a way, maybe this little move lower here could be seen as a possible like little correction before another leg of buying. So again, we could consider something like that, and especially we'll consider that if the price remains above this 92.55 level. So something for you guys to keep in mind, and let's see if that's going to play out. At the same time, we do have the this positive divergence here, which is working out nicely. So yeah, let's see. Like I said, let's see if technically this is gonna work out here. If, of course, don't get me wrong, if it starts dropping below the 92.55 territory, then yes, of course, this could raise concerns about the upside, especially if the index falls below the 92.24 level here, right? So yeah, so for now, basically, we are at a very tricky spot. However, this tricky spot could work out in our benefit. Now, gold. Gold is stuck, and basically it's stuck here at the same level where it started off the week. Let me just quickly jump into a weekly chart. So you can see now gold could be forming here a possible doji here, and well, I mean, well, it's not an ideal one, of course, but nevertheless, I mean, we'll keep an eye on it today. And to be honest, if nothing happens today, then it might just end the week like this, and basically then the whole action might come in next week. But for now, yeah, we cannot really do much here, to be honest, because looking at this picture, it's a very tricky one. And even if you want to consider the downside, well, mean, we could aim for some lower levels, but probably only if the commodity drops below yesterday's low here near the 1924-25 zone. If it drops below it, then yes, we could aim for a move towards this upside support line taken from the low of the 20th of March. But if it wants to push higher, yes, we could consider the upside. However, we need to see, first of all, a break of this little short-term tentative downside line, and then a push above the 2015 level in order to be a little bit on the safe side. Until then, until it's going to be trading here, we're just going to remain neutral and just going to continue observing the price action. Silver, quick update here. So silver is a little bit maybe looking a little bit better than gold this week, of course. But as you can see, still, as I mentioned to you previously, this 27.73 territory continues to provide decent resistance. Although we keep getting these little overshoots, but we're not really getting that close above this area. So in order to aim for some higher levels, we need to see that daily close above this barrier, above this 27.73 territory, and then we could start considering higher areas, a move towards these higher areas, like for example the current highest point of August near the 29.86 level. Now in terms of the downside, it's a little bit of a tricky one here. I mean, and to be honest, if we would like to look at some lower levels, probably we would first wait for a good drop and a daily close below the 21-day EMA here shown as the yellow line, because what we don't want to see here is something like this that we had here on the 12th of August, where the index drifted lower, broke this 21-day EMA, showed willingness to move further south, and then you can see by the end of the day it reversed sharply and moved back up. So that's why preferably a drop below this 24.40 territory could do the trick maybe for more sellers. Now, quick update on Ripple. I'm not going to spend too much time on this one because yesterday it kind of remained above this upper side of the previous falling channel here. So kind of indicating that the bulls indicating that they don't want to give up yet. However, to be honest, for now, looking at this trading activity, will probably just remain a little bit on the neutral side. And as I've mentioned to you previously, guys, in order to aim for some higher levels now, a push above the 0.3262 level could do the trick here for more buyers. But if until then, I mean, don't get me wrong, it could travel higher here, could find resistance near this this 0.3262 level, and then reverse back down. So basically this way kind of confirming that for now the crypto wants to stay in this little range, which let me just quickly probably highlight the boundaries here. So we'll use this right here, there we go. And of course, and let me actually recycle this line here, this highlighted area. So this is the situation basically right now. So that's why we would prefer to see maybe a drop below the 0.2774 level first, and then kind of maybe aim for some lower levels, but only up until this upside support line taken from the low of the 5th of July. Because again, for now, if you look at the slightly overall picture, any kind of move lower up until this upside line could be seen as a temporary correction before another leg of buying. Now jumping into AUD/CHF. Now I haven't looked at this one for quite a while, as you can see by the arrows. They're kind of moved more to the left now, but let me just remove all the drawings and let me just start fresh. Basically, the pair is kind of trading with sideways right now, but if I'm not mistaken here, let me just draw this. So first of all, I mean also sideways, but still within, still kind of making these lower highs. Now in terms of the on the lower side here, it also is kind of moving sideways here, and we could probably just try to draw something like this here, an upside support line taken from the low of the 12th of June. So we have a downside line taken from the high of the 5th of June and the upside line taken from the 12th of June. And this way we're getting ourselves a potential kind of symmetrical triangle, or maybe if you want to call it a wedge, but a flattish veg, but I mean that's not really the case. But again, for now, we can the fact stays the fact that the pair is seems to be coiling up. So in other words, what we're going to do here is we're going to wait. We're going to wait for a break through one of these sides first before, let's say, considering a possible or should I say the next directional move. So if you want to look at some levels here, then probably what you could do is on the upside, keep your eyes on this barrier right here, the high of the 22nd of July, and also the highest point of July near the 0.6687 territory. A nice good pop above it could, yep, open the door towards these higher levels. Now, in terms of the downside, this is where it could become quite interesting. So a drop below last week's low. Let me just grab the line very quickly here. Up, there we go. So a drop below the last week's low near the 0.6493 territory, which by the way is also the current lowest point of August. A nice good drop below it could open the door towards lower areas here, and we could maybe start considering a larger move lower towards the, for example, the first good potential area of support could be here near the 0.6221 level, marked by the low of the 18th of May of this year. So again, it's an interesting one right now, but we need to wait for the pair to make an exit. Now, quick update on US dollar against the Japanese yen. So the pair did try to make its way above the 106 territory, but failed to do so and started moving lower. And you can see now we're kind of, it seems that it wants to approach this 105.30 level again. As I mentioned to you this week, guys, when I was covering USDJPY, we're going to remain neutral as long as the pair can be moving around in this little territory between the 105.30 and the 106 zone. But if it drops heavily here below this 105.30, now this is where it could become very interesting for more sellers, and we could see this one drifting towards the lowest point of July near the 104.19 level or even below that. GBPUSD. So GBPUSD, and this morning, let me just quickly double check. We did get the UK retail sales figures, both core and headline, month on month and year on year, on a month on month and year on year basis for the month of July. And well, I mean, the numbers managed to beat the expectations quite well. So, for example, if we're looking at core retail sales on a month-on-month basis, the forecast was at 0.2%, whereas it came out at 2%. So, of course, it's well below the previous 13.4%, but it managed to beat the forecast quite well. I'm not talking already about the year-on-year numbers, which managed to even kind of double the well, not only double actually, but managed to the core retail sales came out 3.1% against the forecast 1.5%, and the year-on-year, the headline year-on-year retail sales figure, well, that was a spectacular move here, and initially the forecast was 0.1%, but the actual number came out at 1.4%. So that's a decent result, decent number, and you can see that the pound is kind of getting the best out of it right now and trying to make its way higher. Now it's back above the 1.32 barrier, which is great for the bulls. Now we're watching this 1.3284 level, marked by the highest point of December 2019. And no, sorry, not the highest point of December, but the high of the 31st of December of 2019. And if that gets broken, this 1.3284 level gets broken, of course, this confirms a forthcoming higher high, and more buyers could be joining in here potentially and driving this one towards the next potential area of resistance near the 1.3515 level, marked by the highest point of December of 2019 and also the highest point of 2019 in general. So keep your eyes on that one. Now this leads us into EURGBP, and you can see that yes, the euro is not the stronger one today, so, or should I say so far, and this is the result that we're having here on EURGBP, where the pair is breaking now this key area of support, this previous lowest point of August near the 0.8970 zone, and now it's showing willingness to drift further south. Now initially what I'm going to target here is this lowest point of July near the 0.8938 level. Around here, you can see we also have the 100-day EMA. So yeah, let's see if we can get a move towards this area. It's not a huge distance to make. However, we'll be very careful here because it might get a good hold up. If it fails to hold the rate from moving lower, then yes, a drop below this may lead the pair towards the 0.8912 zone, or even going further towards the 0.8867 level. But again, we'll get to that later. But first, what we're aiming here for is the 0.8938 level. And finally, EURUSD. So here, the pair is also trying to make its way higher. However, it remains still below this 1.1910 territory. So I talked about this area a lot this week, and you can see that on on Tuesday, we had a nice pop here above this 1.1910 zone, and then it kind of continued to move higher. On Thursday, it failed to overcome the previous day's high and shifted heavily to the downside, and went back below this 1.1910 zone. Yesterday, it tried to climb higher, but it wasn't really. The bulls were not as strong as they were previously. And today we're seeing, yes, another push higher. I mean, it could go up here and test the 1.1909 or 10 territory, but if it fails to get above it again, then yep, another round of selling here could be possible. So basically, in other words, let me just capture this very quickly. In other words, something like this could be possible, and yep, we could see maybe a test of this 1.1725 level again. But for that, we would need to see the pair we would need to see the pair kind of, let's say, struggling to overcome this 1.1910 zone. So keep your eyes on that one. So guys, I really hope you found it useful. Thank you very much for watching and listening, and thank you very much for joining in. I really appreciate your time. If you want to catch my video later on, my traders tea time is always 13:15 GMT time. For now, guys, I hope you have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.